Hello fellow investors, I'm screening Confectionaries, MDLZ, Mondelez, and HSY, Hershey. Still under the consumer defensive, which stock is the better buy? This is MDLZ valuation summary, all red, implying overvaluation. Trading at 7.06 times EPS, 20.96 here is the current PE, 2.97 here is the EPS trailing 12 months. Again, PE is what we're paying for in a stock. We want this below 3 because we value our money. We want the company increasing their net income and we want them buying back shares. MDLZ gives out an annual dividend per share of $1.4, a yield of 2.24% of the current price. The stock is now down 10.22% of the highs. EPS is nicely increasing, good. OSN is nicely increasing, good. It's the PE that needs checking. Should it trade at 20s of PEs or not? MDLZ is trading at 2.19 times their margins. I pay 1 PE, meaning $1, or less for 1% of their margins. I use 9.57 here as the lowest margins to base our assumptions and fair values from. 9.57 here is the 10-year free cash flow margins. Their margins play around 8 to 12%. I discounted 40% margin of safety from their highest margins of 12.43, the 10-year average net income margin, hence my entry PEs of 6, 7, and 8. 40% margin of safety because their revenues may have cap. 2.19 is the premium you're paying for MDLZ stock if you buy at these prices. Now, what is that 2.19? Is it a growth multiple or a moat multiple? Based on their revenue growth, it's definitely not a growth multiple. Dividends are safe with MDLZ, only 46.32% payout ratio. Price to free cash flow is too high for my liking. My threshold is only 20. Current price of free cash flow is 23.01. Compared historically, in all three submetrics, it's overvalued. PE, price to free cash flow, and PB ratios. PB ratio is very attractive though. I have an allowable PB of 5. I'm screening MDLZ at the current price of $62.37. My fair value for the stock is $28.43. Go to Focus's intrinsic value is 38.88. Here are my entry PEs and prices. This is with 40% margin of safety. I have a high price of $23.76. Let's confirm these prices with our charts. 3% dividend yield is $46.47. 4% dividend yield is $35. 5% is $28. 6% is $23.33. My fair value for the stock is $28.43. My high entry price is $23.76. I'd only recommend buying MDLZ any price below $28. Can we reach those lows? I don't think so. We'll wait for their fundamentals to get better. If not, MDLZ should trade sideways. On the monthly, clearly it's overvalued. Not a single pullback since breaking $23 in 2011 and $28 in 2013. Again, MDLZ long-term entry $28. That price you get to enjoy 5% dividend yield. Next stock is HSY, Hershey Company. This is their valuation summary. Like MDLZ, it's overvalued, trading at 4.08 times EPS, 2.36 times margins, price to free cash flow above my allowable of 20, and PB ratio is above my allowable of 5. Historically overvalued as well. Let's look more into this stock. The stock is now down 5.04% of the highs, gives out an annual dividend of $3.6 per share, a yield of 1.64% of the current price. EPS is nicely increasing, good. OSN is nicely decreasing, good. Should it trade at 30s of PEs? The simple answer is no. Their margins only play around 12 to 18%. HSY should be trading at teens of PEs, not at 30s of PEs. Is it a growth multiple? Based on this revenue growth, it's not worth the premium. 2.37 times margins. I use the normal MOS here, margin of safety 30%, hence my entry PEs of 12, 13, and 14. It must be a moat multiple though. I mean, Hershey is Hershey. Price of free cash flow is too high, 28.14. Payout ratio is only 46.32%. Dividends are safe with this stock. Historical PE overvalued, historical price of free cash flow overvalued. Historical PB though, cheap, but still above 5. Again, this is HSY valuation summary. I have fair values for the stock of $104.57. Guru Focus's intrinsic value is $79.87. Here are my entry P's and prices. I have a high price of $108.92. Let's confirm these prices with their charts. 2% dividend yield is $180, 3% dividend yield is $120, 4% $90. My fair value of the stock is $104.57. If you can buy it below $90, so you can get 4% dividend yield, sure, but any price below $105 is good anyway. This fair value is only good for this quarter. Next quarter, they might put out good numbers and these fair values could go up. For now, HSY is worth $105 per share. Now, if we put them side by side to determine which stock is better, here's that table. I won't recommend buying any of these stocks at the current prices because it's both overvalued. But if we're to choose one of the two, the lesser evil is MDLZ, only because of the PB ratio and the proximity of the current price to my fair values. But again, only buy MDLZ any price below $28 and HSY $105. That's my take on this confectionery stock. See you next video. More consumer defensive stocks to come.